Hmm. Okay, Deepak, stay on. Lots more to talk about. Let's get in one more management. Arshiya International, they came out with numbers. PAT on a YY basis has grown 42%. Sales have grown 32%. But if you look at it sequentially, profits are down. Logistics margins in FY12 are lower vis-a-vis what they were in FY11. Nijay Nair, Head of Strategic Initiatives at Arshiya, joins us right now on the phone line from Mumbai. Nijay, good having you. Thanks so much for joining in.
Thanks for having us. Yeah.
It's a great quarter on a YOY basis, Nijay, but I'm going to be a bit tough on you purely by virtue of the kind of growth that a lot of people on the street expected you to clock in. On a quarter-on-quarter basis, profits are down. And for FY12 as a year, logistics, which is the big thing that everybody watches out for in Arshiya International, the margins have gone in that business in FY12 vis-a-vis FY11. What's happened there?
Yeah, no, actually quite surprising. From a logistics basis, we've always announced that we would refocus all our overseas interests in logistics and concentrate on India. So first of all, when you look at the logistics business from a domestic front, our EBIT margins have actually improved, but we've shut down Oman and Qatar in the last year, and that's been to augment all our services in and around the infrastructure play that we've got in this year. So that's one. That explains the logistics. Also, for the quarter, if you look, the rupee appreciated against the dollar about 4 or 5%, and that's resulted in a mark-to-market forex loss on our outstanding debtors, both in the free trade zone business and the overseas logistics, and that's a small marginal decline in the PAT that you see.
Okay, so does this get corrected, Nijay, in the quarter ahead?
Yeah, so absolutely. So if you look at the rupee, we closed at about 53.3 on December 31st, and then 51.1 on March 31st. So some of the bills that we've raised also will correct itself in the following quarter that is coming. What is significant for us and what we really believe is from a year-on basis, we've crossed, we're about 1,055 crores. About 42% of all our top line out of that has come from our infrastructure business, which is the free trade zone and the rail. So free trade zones contributed about 16% out of that. And Q on Q, since you talked segmentally, Q on Q on the free trade zone, which is only the 6th quarter for us in this business of the free trade zone, 30% we've been growing, and the EBIT margins for us is about 70% in the business. Rail also, if you look overall with 272 crores in the year, about 26% contribution has come from the rail space. And we've been growing, about 15% Q on Q for the whole year. And overall for the whole year, about 60% is what we've grown. So our drivers of the business comes in and around these asset investments. And in a nutshell, if you ask me what we've delivered, 450 odd crores of revenue is what we've generated on a capitalized asset of about 1,000 crores in the last year. So I'd say we've had a great year. Obviously, the forex losses, it will correct itself going forward. But the focus on our business has been to revolve our services play around our assets. And at that, we've been phenomenally successful is what I would put down to.
Okay. Nijay, then leave us with what would you do in the next year, because you've grown on a YOY basis. Your PAT since 2008 has almost tripled. What do you do in FY13?
Yeah, so that's actually pertinent to the first question also. We are in a modular phase of induction of capital expenses that we are capitalizing with on the form of warehouses or rakes. So every year and every quarter, your finance costs, interest costs actually hit your bottom line and therefore also depreciation. But on the other side, and this is one effect that you've seen also on the PAT, which is on your first question. But this year, we've got actually 3 new infrastructure plays that we will integrate into our bottom line that is not visible in the numbers that you're looking at today. And that's the free trade zone in the north with that's already operational, but it will hit our quarter this coming quarter. Also the domestic district park and the rail terminal. All of this will come in. So FY13, if I were to say that we would do much better than this last year, that would be an understatement. So it's a big year for us coming up, and this current PAT, because of the forex, is really non-consequential.
Great, good having you, Nijay. Thanks so much for joining in and giving us that quick perspective. We're running out of time, but just about time to take in a couple of quick words from Darshan and Navneet on a couple of earnings that will come out. IBRCL